the CIS President, the Doyen of the Nigerian Stock Exchange, Action Chairman, gentlemen of the press, CEOs of dealing member firms, I welcome you all to the 2017 Market Recap and 2018 Outlook of the Nigerian Stock Exchange. As you know, at the Nigerian Stock Exchange, safety is very important to us. So I'll call on my colleague, Boluwatiriomidiji, to give us a safety briefing before we start.
Thank you. Good morning once again. Welcome to the Nigerian Stock Exchange. At the Stock Exchange, safety is our priority, and as part of our health and safety policy, I would like to make the following announcement. To my right behind the backdrop banner is an emergency stairway, and there is a stairway you can access from the lift lobby. In case of emergency, please do not use the elevators. Our emergency responders will be here to direct your next steps. I would now like to enjoin you to switch off your cell phones or activate the silent phone function so we don't interrupt the proceedings here today. I'll hand you over to Mr. Olumide Orojimi, the head of corporate comms, to take over.
Thank you very much for that wonderful introduction. Before I call Mr. Oscar Onyema to do his presentation, can we do something real quick? Happy New Year to you all. You can look to your left, to your right, and say Happy New Year to the person beside you. If you so wish, you can ask them for their ATM card. You can ask for their house address. And if you are lucky to find a beautiful person beside you, you may propose. All right, now that we are all smiling, and perhaps we should do the second one, which is to congratulate Ms. Tinoawe, who has just been promoted as an executive director of the Nigerian Stock Exchange. It seems the year is starting on a very good roll as well. Okay, so on the high table, we have Mr. Ade Ewosho, who is the acting divisional head for our trading business. And of course, the newly appointed executive director, regulation, Ms. Tinoawe. I will skip somebody and go over him. Mr. Bola Adeko, who is the head of the shared services of the Nigerian Stock Exchange. And Mr. Tony Ibeziako, the acting divisional head of our listing business. And of course, the man in the middle we all know. He's a thought leader, he's an African champion, and he's the CEO of the Nigerian Stock Exchange, Mr. Oscar N. Onyema.
Good morning, distinguished ladies and gentlemen. And Happy New Year. Thank you, Olumide. When you were introducing me, I was looking to to see who you were talking about. I'm very pleased to welcome you to the 2017 Market Recap and 2018 Outlook of the Nigerian Stock Exchange. Emerging from the recession in the second quarter of 2017, Nigeria witnessed a rebound in investment activity, which saw the NSE recover from the macroeconomic overhang of the commodity down cycle to become the third best performing market of 2017 globally. The market recovery was driven by several factors, including gradual economic recovery vis-a-vis improvement in global oil prices, domestic output, and stronger foreign reserves, engendering greater foreign portfolio investment confidence. 2, improvement in the ease of doing business as Nigeria climbed 24 points in the World Bank Ease of Doing Business rankings. And 3, improvement in FX stability following favorable central bank policies, including the investor-exporter window establishment. Real GDP growth of 1.4% in third quarter 2017 from 0.73% in the second quarter of 2017, and downward trending inflation was buttressed by greater stability in the foreign exchange market. Beginning in the first quarter of 2017, the central bank implemented a series of monetary policy actions and interventions to boost liquidity and drive convergence in the FX market. Newly created market segments helped ease demand pressures in the parallel market, resulting in a gradual reduction of the market spread from a peak of 217 naira, that's about 71%, in February to 57 naira, or 18.63% as of December 2017. You will recall in January of 2017 that we indicated that the wider that spread is, the less the liquidity in the equity markets. So there's an inverse relationship. Optimism over Nigeria's economic recovery also contributed to the MSCI's decision to retain Nigeria in its Frontier Market Index as at its June 2017 index review. The Nsc Equity Market Review. The Nsc Banking Index emerged as the NSC's top-performing index of 2017, buoyed by strong corporate earnings reports by the sector's key players. The index posted returns of 73.32%. Coming in a close second with one-year returns of 70.33% was the Nsc Pension Index, which tracks the performance of the NSC's top 40 companies by market capitalization and liquidity in accordance with PENCOM guidelines. The Premium Board continued to demonstrate the appeal of strong, transparent, listed companies to global investors, closing as the third best performing index of the year with 51.23% returns. The NSC Consumer Goods and Industrial Indices also delivered strong performances as the FX market gained momentum. All other NSE market indices recorded positive returns except the alternative securities market, which posted a decline of 8.9%. Equity market activity skyrocketed from 2016 levels as market turnover increased by 121% to 1.27 trillion naira. For the second consecutive year, domestic investment flows outweighed foreign portfolio investment flows, albeit marginally. Overall, the domestic retail segment recorded the least growth during the year. As at November 2017, the value of domestic retail trade totaled 364 billion naira, which represents a modest increase of 39% from the previous year, compared with the triple-digit growth recorded in all other investor classes. Reviewing foreign portfolio investment trends for the year, we note that foreign inflows outpaced outflows in 2017, with positive net flows sustaining from March 2017 and peaking in August 2017 on the back of positive economic data releases, such as the second quarter GDP report and rising PMI readings. IPO activity in the year remained mute, however. However, there were several other positive indicators, including the revival of supplementary listings and the return of new issuances. The market saw a 9-fold increase in the value of new issuances, buoyed by M&A activities, listings by introduction, rights issues, and others, bringing the total value of equity issues in 2017 to 408 billion naira. NSE Bond Market Review. The NSE fixed income market recorded mixed performance. New bond issuances increased over the previous year. Bond yields gradually moderated from 2016 levels amidst easing inflation and greater FX stability. Yields across various tenures declined between 0.4% and 1.5%, and market turnover declined by 26% in 2017 as investors sought higher returns in alternative product classes. Bond raising activity was dominated by the federal government of Nigeria as it continued to leverage the capital markets to finance the MTF and rising fiscal deficits. The year 2017 saw the listing of the 1.5 billion dollar FGN Eurobond, which was approximately 8 times oversubscribed in international capital markets. Other pioneer issuances during the year included the maiden 5-year $300 million FGN Diaspora Bond, the 100 billion naira FGN Sukuk Bond, and the record-setting 10.69 billion naira FGN Green Bond, which is the first green bond issued by an African sovereign and the first climate bonds certified sovereign bond ever issued. Conversely, the domestic corporate bond market saw a slowdown in activity relative to 2016. Corporates raised 21.5 billion naira in 3 listings in 2017, representing a 75% decline from 86.1 billion recorded in 2016. The Nsc Etf Market Review. The Nsc's ETF market witnessed increased activity across key metrics in 2017, recording a 272% year-on-year growth in trade volumes, 33% growth in turnover, and 39.5% year-on-year increase in market capitalization to close the year at 6.69 billion naira. This is attributable to growing adoption of the asset class by investors and asset managers, as well as new issuance in 2017, the Stanbic IBTC Asset Management Limited Pension ETF 40, which is the NSE's first pension-based ETF. With regards to market performance, the Nsc Banking ETF posted the highest return of 70% in the ETF market segment, closely mirroring the gains recorded by the banking sector and its benchmark, the Nse Banking Index, while the New Gold ETF, which tracks the spot price of gold, posted the second highest return of 47.87%. The sector-based ETFs tracking the Nsc Banking, consumer goods, and industrial sectors were the most actively traded ETFs. Nigeria in the fourth industrial revolution. The year 2017 saw financial institutions push the envelope in their exploration of emerging technologies in response to increasing digitization and shifting customer expectations. The transformative impact of emerging technologies became even more apparent in the capital markets as exchanges across the globe successfully deployed technologies such as cloud, distributed ledgers, or blockchain technology, big data and predictive analytics to optimize processes and roll out new business models. Some of these initiatives include the launch of Bitcoin futures by the Chicago Mercantile Exchange and the Chicago Board Options Exchange. The Australia Stock Exchange's move towards permissioned ledgers in equity market clearing and settlement, and the growth of NASDAQ's alpha business. The prevailing fourth industrial revolution offers Nigeria a leapfrog opportunity to achieve sustainable economic growth by, 1, empowering a larger proportion of the populace to be included in financial markets, and by leveraging emerging technologies, unlocking efficiencies in product and service delivery for financial institutions, and increasing the transparency of Nigerian financial system. Indeed, the Nigerian capital market has embraced emerging technologies to some degree. The NSC, for example, employs predictive analytics in our market surveillance systems, SMARTs. However, the overall participation of the Nigerian capital market remains far less than that of our counterparts in developed and emerging markets, a trend which must be reversed to ensure that Nigeria remains a globally competitive investment destination. This means that a broader collective and collaborative effort from regulators, market stakeholders, and other private entities is required to determine which emerging technologies to pursue within our markets and local context. The NSC continues to monitor the changes in the horizon and is open to partnering with private and public entities in its pursuit of game-changing technologies that have the potential to catalyze growth in the Nigerian capital market. NSC Strategy Execution 2017. The NSC made steady progress within its strategic focus areas set out at the beginning of the year in 2017. Demutualization remained a chief strategic focus for 2017. Through targeted engagement efforts with our members, the Securities and Exchange Commission, the National Assembly, CAC, and other key stakeholders, we achieved the broad-based support required to secure approval for demutualization from the exchange's members and successfully progressed the demutualization bill through the reading and public hearing stages of the lawmaking process. As articulated in the bill, it is anticipated that the demutualization of the NSC will further catalyze the development of a dynamic, transparent, and efficient capital market, which is critical to Nigeria's socio-economic development. In 2017, we amplified our efforts to establish West Africa's first exchange-traded derivatives market and achieved a number of key milestones during the year. These include 1, completion of draft rules, 2, development of product specifications, and 3, market-wide trainings on derivatives and clearing, central counterparty clearing transactions. We also worked to create and enhance legal and regulatory frameworks which support derivative instruments and have made significant progress towards securing approval to operationalize these frameworks. We believe that these efforts have positioned us past the most significant roadblocks on the path towards an exchange-traded derivatives market. Other achievements during the year include market development. Under market development, we launched the X Academy, which is the NSC's educational institute, in June of 2017 to empower financial market professionals in Africa. It has delivered 8 programs to 1,279 participants to date. Competitive pricing structure. We continued the phased implementation of the NSC SEC pricing recommendations. Capacity building events. We hosted the inaugural Sub-Saharan REITs conference, the Green Bonds conference, market data workshop, and derivatives conference. Stakeholder engagement. We ramped up our engagement with key stakeholders, both public and private, and domestic and international, to promote market-friendly policies and drive development of the capital market. Business development. We launched a number of new products. We collaborated with the DMO and the federal government to launch the federal government savings bond and started work on building an enhanced mutual funds distribution platform. Strategic partnerships. We signed an MOU with the Casablanca Stock Exchange to promote market integration, new listings, and exchange of information. MSCI partnership. We progressed development of the Nsc MSCI co-branded indices, which will be distributed globally. Investor protection. We rolled out our corporate governance rating systems to all listed companies and constituted the corporate governance rating system steering board to approve results of the CGRS certification exercise. And the announcements will actually be made, I believe, on the 19th of this month of January. We also updated our data center and actually launched that. We now have a tier 3 designed data center to support the exchange and the market. E-dividend drive. We supported investors to process unclaimed dividends under the e-dividend registration initiative in partnership with the Securities and Exchange Commission. Investor Protection Fund. The IPF Board of Trustees continued to pay out substantiated claims pursuant to the Nigerian NSC Investor Protection Fund rules. Corporate citizenship. We progressed our draft sustainability disclosure guidelines for all listed companies, and indeed, it is now pending SEC approval. Education intervention programs. We built and donated the Maisandari Alanduri Model Secondary and Primary School to help internally displaced persons in Borno State. We also, through our financial literacy programs, reached 57,666 beneficiaries through 175 programs across the country. And we raised about 44.65 million naira in our corporate challenge for mobile cancer units in the 4th edition of our annual 5K race. The NSC 2018 to 2021 strategic plan. In keeping with its objective of taking a rigorous and adaptive approach to strategy execution, the NSC reassessed its strategic agenda in light of changing dynamics in both the operating environment and the global exchange landscape against the backdrop of the 4th Industrial Revolution. This culminated in a new corporate strategy for the 2018 to 2021 period. In redefining its strategic ambitions, the NSC selected 3 key focus areas to pursue to enhance our global competitiveness and appeal to stakeholders. They are based on 1, satisfying our customers, 2, boosting our retail segment penetration, and 3, enhancing our organizational agility, enhancing our customer focus. The NSC is taking a greater focus on delighting our customers across the value chain. We are committed to better understanding and meeting our customers' diverse needs by leveraging adaptive new technologies, and we'll be carrying out a series of activities aimed at supporting this objective. 2, focusing on retail investors. The exchange will increase its focus on growing retail participation as a key component of a well-functioning and resilient market. To this end, we will be partnering with market stakeholders to deliver a number of financial literacy and investor outreach initiatives which align with existing plans, such as the Capital Market Master Plan and the National Financial Literacy Plan, as well as undertake new initiatives that can help drive a more radical change. At the crux of our effort is the establishment of a retail coverage department which will be dedicated to development and publicity of simple, affordable, and efficient investment products and services that can effectively support the Nigerian populace at various stages of financial mobility to create durable wealth. Reorganization for optimization. The exchange is restructuring to drive our new corporate strategy. There are a number of new departments that have emerged to support our evolving strategic ambitions, which are primarily geared towards innovation, emerging technologies, and retail participation. We are optimistic that the new structure will support us to better execute on the 2018 to 2021 strategic plan, enhance organizational dynamics, and achieve new efficiencies as we demutualize. Over the course of 2018, we will provide further information on our strategic initiatives in terms of progress, market impact, and the benefits to our valued stakeholders. Outlook for 2018. The economic outlook for Nigeria is relatively positive. The IMF forecasts 1.9% real GDP growth in 2018, representing a 1 percentage point increase from its estimate of 0.8% growth in 2017. The forecast is predicated on stronger global economy and synchronized expansion in global investment, trade, and manufacturing. Higher global oil prices and domestic production, greater stability and transparency in Nigeria's FX markets, and fiscal stimulus from planned increase in infrastructure spend. Accordingly, the outlook for the Nigerian capital market is encouraging. Indeed, to some extent, political activities and currency movements will have an effect on the market, but we expect that such impacts will be short-lived, and the performance of the underlying business activities will ultimately determine market performance. On its part, the NSC is on track to become a more agile and flexible demutualized securities exchange. We are hopeful that the demutualization bill will be signed into law in 2018 and are working assiduously with our advisors to fine-tune outstanding aspects of the demutualization project, as well as providing clarity on the process via regular engagement with all of our valued stakeholders. We expect that the year ahead will also see the launch of exchange-traded derivative instruments. This will not only help us meet our objective of facilitating order flow across various asset classes, but will offer our ever-increasing community of domestic and global investors a greater array of products to diversify and manage risk. We will also continue to engage with the government on privatization and listing of state-owned enterprises. We plan to maintain our role as an advocate for the adoption and implementation of market-friendly policies required for sustainable economic growth. X-Academy will continue to be at the forefront of driving capacity building across Nigeria and the rest of Africa. Given the growing demand for innovative products and solutions, the NSC will leverage on its network and knowledge to take Africa's financial markets to greater heights. Thank you very much.
I think we can clap better for a market that is the third best in the world as of today. All right. We will go to the question and answer session, but before we do that, I want to encourage all the people that will want to ask questions. Say your name first and the organization that you work for. Please just go straight to the point, which is your question. Let's skip the commentary so that we can have as many people as possible to ask questions today. So, here we go. Questions for Mr. Oscar Onyema. Okay, whilst you guys are still trying to think of your question, may I ask Mr. Onyema one question? I know the soundness of my sleep and the duration has improved between 2017 levels and 2018. Because in the line of the job that I do, I check my Google alert before I go to bed, and the first thing I check in the morning. Last year, NSC was market, this, that, but it's better now. Do you sleep better now?
That's a tough question. The truth of the matter is that because markets, operate in cycles, they will always go down and up they operate in cycles. So I don't allow down cycles to disturb my sleep. Because I know that it will come up.
That's a very good clap back, Mr. Onyema. Thank you very much. So, questions? Okay, Mr. Nona will shoot first, but before you do that, let me apologize to you and other folks that have their ID cards taken downstairs before you were given access card. I'm very, very sorry about that. We'll look into that and we'll sort it out.
Thank you. For the records, my name's Nona Awo, and I do work for Palesa Capital Markets Associates. And one of the principal things we do for the market without fee is that we also educate the market, because we've run a TV program for 12 years now. But having said that, I am concerned on 3 broad areas based on your presentation. I basically will want clarification. The first is the fact that you sleep well, and I'm happy. But I can confirm to you that quite a number of stockbrokers are not sleeping at all. And the reason they are not sleeping is because they are not making money. So in 2018, looking at where we are going, in particular looking at the velocity of the market, and looking at the performance of the emerging markets, what is it that you are going to do differently this year that will help to bring sleep to the eyes of this class of participants in the market? That's my first major concern. The second one has to do with the area you talked about, enhancing consumer focus. And I'm quickly run through. Investor protection. How does that relate to the issue of delisting of companies? Because one of the things that one was hoping that will have been done will have been a partnership between Nigerian Stock Exchange, SEC, and CAC in making sure that investors are protected post-delisting. But that is not what is happening now. I also did recognize the fact that you talked about unclaimed dividend. But unclaimed dividend is only a small component of the difficulty that the retail investors do have. And interestingly, the retail investors are largely Nigerians, not the foreign players. The delisted companies, when it comes to monies that is accruable to Nigerians, also becomes status bar after 12 years, which is classically linked to the issue of abandoned property in Rivers State. What is it that you'll be doing in 2018, realizing that you did so much in terms of demutualization? What is it, what role and who are you hoping to relate with to make sure that Nigerian investment permanently remains their investment even when the companies do delist, 12 years notwithstanding? I'm also concerned as to the unit trust component, again vis-a-vis driving investors' confidence. What are we going to do different in 2018 for mutual funds and unit trusts in terms of disclosure? Quite a number of them are not even talking to anybody after taking their money. What is it that we'll be doing differently? And on the final note, disclosure. We have 2 classes of quoted companies. Those of them that have primary reporting line. By this I mean insurance company and banks. And those 2 classes of listed companies do disclose to the regulators, their primary regulators, in terms of forecast. And some of them have started to do that with Nigerian Stock Exchange. At what point are we expecting that these disclosures will also be made public so we don't have 2 classes of investors? It's on that note I want to thank you for this opportunity. But let me also disclose, since I'm talking about disclosure, that following Tino Awe's promotion, we've agreed that there will be a welcome party for her, and that welcome party will be held in a very big hotel. We don't know who is going to pay the bills yet. On that note, I thank you. Thank you.
Let's take from Abasin.
Thank you very much. My name is Otto Abasekong from ProShare. In the 2017 outlook, review, you talked about the alternative securities market, SM, recording a decline. So in 2018, what's the strategy from NSC to ensure that this market is very attractive and gets that activity and penetration that is required? Thank you.
The third person will be Jamil, then Mr. Onyema will answer, then we'll take another 3 rounds of questioning.
Good morning, everybody. I rely on existing protocol. As the MC has introduced me without my permission, my name is Jamil. My name is Mohamed Jamil Kaudi. I trade for APT Securities and Funds Limited. My question goes thus. In your 2018 outlook and the strategy that you are trying to employ to make sure that this market is a good one for in 2018, you only made mention of retail investor as part of the local people that we are expected to be participating in this market, but you have not made mention on your strategy on the institutional investors as regards to PFAs, insurance company. What are those things that you intend to make sure that you bring these people to this market? Mind you, we need these people to participate in our market so that the locals can be able to move our market the way it ought to be. Thank you, sir.
I would like to know your outlook, your IPO outlook. Like you said that the market was mooted, last year. Remained moot last year, but what's your outlook in that direction? And I also didn't hear you say anything around derivatives trading. What are we going to see in that direction this year? Then where are we on MTN listing?
Yeah, you've done more than 2 questions.
Kalamzat is my name. I trade for Call Invest Capital. Our protocol observed. My question is actually on the IPO, which the last speaker have actually touched on. I feel that we shouldn't continue on 2 years consecutively without IPO in this market. I think the NSC should step up activities around this thing. What are those things that we'll be doing to draw them to the market? That's 1. 2, I also feel that last year we had so much activities on the exchange. I think this year we should focus on 2 or 3 activities. The one that will pursue the logical end. That by the time we close December 2018, we'll be telling ourselves that we have done this right. We have done this right. We have done this right. That's my observations.
Thank you, Mr. Onyema.
Okay, thank you very much. The question from Kehinde Adiaga, what is driving the market growth in 2018, the 15 trillion that we've seen? So we have a few theories, which obviously can be challenged. The first one is that we think that the fact that the market is the 3rd best performing in the world, and this was widely publicized by CNN and some other news media, made people understand that they've missed out. And then when you do your fundamental analysis, you actually find that when we started the down cycle in 2014, we were at about $84 billion in market capitalization, equities. Even with this 15 trillion that we have, if you do the math, we just passed half of that in dollar terms because of the devaluation that we've taken. So people realized that the market is still cheap, and so they wanted to take positions, given the fact that we've already taken a devaluation. Yes, most of the activity we've seen is also driven by foreign investors because of improvements in the investor-exporter window. And they've tested this window, the window out. When they came in 2017, they were really trickling in, and they did a pull-out to see if the CBN will allow them take their money. And the CBN did allow them take their money. So now they feel more confident to bring in the big money. Actually, the bigger firms, traveling and talking with global emerging market funds, Africa funds, and frontier market funds, the big money did not really switch the dial immediately that window was established. Because first of all, your risk manager has to tell you that it's okay for you to start investing in Nigeria again. And most of them said they actually had a Nigeria fatigue, given all the challenges that we had had. So it is just now that those processes are opening up and they're able to begin to take positions in the market. I think there are many other reasons. Confidence is improving. People are also believing that fiscal policy would also kick in at some point to drive a second round of growth with the release of capital votes to drive infrastructure spending. You know, the jury remains to be seen. Obviously, there is also downside risk, especially as we go into the political circle. You know, we think that at the end of the day, the performance of the companies themselves will be what would drive market capitalization. The question on market makers. There are still market makers in the market. We are not satisfied with their participation rates and how they've catalyzed growth in the market, especially when we really, really needed them to participate in the commodity down cycle. And so we've taken a critical look at it, and we've engaged with the market makers and other market participants. And in 2018, you're going to be seeing a very significant change in the structure of market making and the rules around market making. So yes, we're looking at it, and we intend to make significant changes. The question about penalties and whether we're engaging NIACOM, I would ask Ms. Awe to address that.
Thank you. We have engaged with NIACOM as well as the insurance community. We've actually been engaging at least since 2013 because we do realize that we have a compliance problem if you are going to look at that sector on its own. And so we felt that the best way to deal with that problem was to try and figure out what the problems are that are causing the issues with late filings. So we have a number of things that engagement has shown, and we've been working with the insurance companies to try and see whether they can overcome some of these issues. With NIACOM in particular, we recently had an engagement where Mr. Onyema actually, under the auspices of NIACOM, met with the MDs of all the insurance companies and spoke to them about some of these issues with a view to trying to see whether there's anything that the exchange can do. There are issues such as the multiplicity of the types of companies under one umbrella in an insurance company, an insurance holding company structure, for example, and which of them is listed. So sometimes it's there are one or two companies that are listed in a group and others are not listed. So ensuring that we can collaborate with NIACOM to see whether the results of the listed company can come out on time is one of the things that we've been trying to do. But one issue around that is, do you then have, as a regulator, being NIACOM, do you have a full view of the insurance company as a whole if you allow one set of results to go out and the other results are not ready? Some of the companies have also invested, just like any other company, in assets in other jurisdictions that may not be as profitable as they would want them to be, or they have different reporting lines in those other jurisdictions. And so bringing in all the results in order to be able to report has also been an issue. These are not issues that we think we have a one-size-fits-all to, and so we've had specific engagements with a certain number of the companies, and we expect those engagements to continue until we're able to come to a position where we will see better improvement in their compliance. We do not have a penalty target, and so you've quoted a number. We do not have a penalty target. What we want to ensure is that companies file their results on time. And so if you recall, in January 2017, our default filing rule came out, and that default filing rule ensures that there's a significant degree of disclosure before and after. So if a company is not going to file on time, it is required to file a press release and to explain why it is not going to file on time. And then when it files, it is required to file a press release around that. You also have compliance indicators. So some of the things that we can do to assist the market to point to the fact that you may not be getting results on time, and therefore in terms of making your own investment decision around a buy, sell, or hold of the assets that you have or that you want to, or that you're considering acquiring in that company, you have additional information to be able to make those decisions. But the issue of how soon we will get all those companies to be able to comply is something that's a longer term issue that we're working on, and we're working very closely with NICOM and the companies on it.
Okay, thank you, Tinu. Ihan, you also asked about federal government savings bonds. You wanted us to comment on it. We said that we've worked with the government to create that product. A little over 7 billion naira was raised for the government through the federal government savings bond. We've also engaged DMO and the brokerage community and other stakeholders to see how we can improve the distribution of that product, and also the product itself to make it more attractive to the domestic retail investors. The other question you asked is about derivatives trading. We did say that we'll continue to push derivatives and hopefully start trading this year. As you know, the framework needs to be in place, and we're working with the regulators and other entities to make sure that the draft framework we've given them get approved, and then we'll then be in a position to start trading derivatives. The question about MTN listing, our policy is not to make announcements for companies. We think companies should make their own announcements. I think that MTN has publicly announced its intentions with regards to IPOs. What I can tell you is that a number of companies have indicated interest in doing an IPO. However, an indication of interest is very far from being an IPO. So we'll continue to engage with those companies and see which ones we can bring to market. Mr. Collins spoke about IPOs. I hope we've addressed your questions. The only thing I want to add is that as a well-respected broker, I should be asking you how many IPOs you're bringing. And then we've noted your comment about focusing on 2 or 3 activities.
All right, thank you very much, Mr. Onyema. Questions? I saw Peter. Okay, Bonnie Amadi, right?
Thank you very much. My name is Alex Ekemena. Next money. One major area of concern is the unfolding of the fourth industrial revolution, in which case the world around us is changing very fast, that we may not even be able to catch up. And one of the significant thrusts of this revolution is the emergence of blockchain technology, Ethereum, Bitcoins, what have you. What is NSC trying to do in instilling market confidence around these technologies? I use the word instill, not restore.
Sir, can you ask the question?
Yeah. People have sound cautionary notes around these technologies, and while others say, oh, we should be optimistic about it. What exactly is the position of NSC as regard, the trust of blockchain technology and the rest of it? That's my first question. My second question is the component of the market rebound that we are seeing recently, driven mainly by, increase in our foreign reserve, increase in oil prices, and significantly domestic output. But what is the component of this domestic output in terms of industrial production, around the country that has served to catalyze, the market rebound that we are witnessing today? Thank you very much.
Peter Egwatu.
Yeah. The name still remains Peter Egwatu. I write for Vanguard newspaper. I have two questions. The first is on Investors Protection Funds. You didn't tell us how much you've disbursed so far in 2017. And the second question is on your direct cash settlement initiative. I didn't hear anything about that, because some of the investors are complaining that they are not aware of that initiative. Thank you.
My name is Odume Festus. I work with Financial Edge. My question is on the strategic execution of 2017 and 2018 to 2021 plan. One, you talked about competitive pricing structure. I want to get more understanding, apart from what we're expecting in January 29, the power value issue, if you can shed more light, because there is no much understanding about what is going on that pricing structure. Then my second question is on the Casablanca signing that you've already had. And I wanted to know what is going in the mind of WASMIC, that's the West African arm of the capital markets, vis-a-vis the apathy as regard Morocco joining ECOWAS. So what is the thinking of WASMIC in terms of the apathy that people are having about Morocco joining ECOWAS? And my last question is what you talked about enhancing our customer focus. You highlighted the second line there, that's creating customers value proposition and reward system. So when you say reward system, what do you actually mean in that direction? Are investors going to be rewarded with one thing or the other? Also, you can explain more.
Thank you. Mr. Onyema, over to you.
Thank you very much. So the first question is, what is NSC doing to instill market confidence in blockchain technology and other emerging technologies? And also, what is NSC's position with regards to cryptocurrency? I think that's the We believe that the first thing we need to do, and we're doing, is to understand these technologies and understand the power of these technologies. We believe that with the power that we believe these technologies have, the underlying technologies, if we don't do something, we may be disrupted. And so it's really a question of survival and sustainability. You can bury your head in the sand and say that there's no problem, or you can look at it square in the face and understand it and see how you can take advantage of it. Like other global exchanges, we believe that there's significant value in distributed ledger technology, which is the underlying technology supporting cryptocurrency. We don't think that cryptocurrency in and of itself significantly would affect exchanges in the next 3 to 5 years, other than coming up with products such as CME has introduced with its Bitcoin futures. We think that for Nigeria, we're not there yet. What we need to do is really see how we can take advantage of the underlying technology. We have record-keeping problems in the country, and the capital markets is no exception. So if you look at statistics, especially around the register of companies, for example. And then you asked about what is the component of the domestic output that is really helping to drive the growth that we've seen. Is it the growth that we've seen in the market or the recovery in the economy? The recovery in the economy. You will notice that a lot of these listed companies, and indeed even non-listed companies in the fast-moving consumer goods, for example, sector, came up with really innovative ideas to continue to push sales. They changed the size of their products, so that if you're buying rice, for example, you can buy smaller bags of rice and things like that, effectively increasing prices, actually. So they did such things and saw improvements in their output, and the numbers that have been reported to the exchange have been very positive numbers. If you look at the banking sector, you've seen a lot of them hitting new highs in terms of their profitability and all of that, in spite of challenges with NPLs and the rest of it. So we believe that some of those things have also contributed to the recovery that we've seen. However, not as much as crude oil output and the global prices, just because the challenge we had was not a GDP challenge per se. It was a foreign currency challenge. And so that is why we focused on that in our analysis. The question on IPF disbursement and direct cash settlement, I think for 2017 we paid about 8.2 million naira. You have to understand that the IPF rules have a maximum outpay of, I believe, 400,000 naira. Over 92% of the claims that we get are below 400,000 naira. So you have to put it into perspective. The direct cash settlement initiative, I believe, first of all, the direct cash settlement initiative is a market-wide initiative. It's not an Nsc initiative. It's a market-wide initiative that is driven by the Securities and Exchange Commission. And the target was to launch, I believe, October of last year. That was not achieved. And I don't think that, I'm talking about the new form direct cash settlement, where everybody will do direct cash settlement, except if you now actively go and say you don't want to participate in direct cash settlement. So stay tuned, and at the right time, the market will make the announcement. Odume Festus, your question on competitive pricing. There's a lot of work that has been done with regards to competitive pricing, and really that has nothing to do with market structure changes that we just announced that will take effect on the 29th of January. Competitive pricing has to do with the fees people pay to participate in the market, regulatory fees, broker fees, and other kinds of fees. And what we've done is to do a market scan around the globe to see how competitively priced products and services are as compared to other emerging markets, frontier markets, and even advanced markets. And then we have looked across various asset classes, fixed income, exchange-traded funds, and equities. And we've started implementing some of this pricing. So if you look at our fixed income market, there were drastic changes in the structure of fees last year. The market as a whole agreed to introduce a new pricing structure sometime this year, but that is driven by SEC, and it will be applicable to various segments of the market. So what we are highlighting is that we will continue to be very supportive of initiatives that make it cheaper for investors to participate in the market and for companies to bring their companies to the market. And then your last question with regards to Casablanca and WACMIC. The Casablanca Stock Exchange is already an observer member of WACMIC. That means they participate in the West African Capital Market Integration Council meetings, but as a non-voting member. The WACMIC itself has not taken a position as to whether they are supportive of Morocco's attempt to join the ECOWAS or not. One thing I can guarantee you is that from a Pan-African perspective, exchanges in Africa are working to link their markets together and make Africa a more attractive investment destination as a deeper liquidity pool. And so if we can accomplish those kinds of things on a sub-regional level, it will help us to complete the regional level integration faster.
I will make one quick exception for Mr. Henry Atenega. Sir, please, one question, please. Joseph.
My name is Henry Atenega, and the first shall be the last. I pioneer stock market reporting in Nigeria, and that is no one can take from me. Let me pass over to you an information that may be useful to the stock exchange. I'm a blogger, and I have online a blog analyzing. I discovered that the interest in stories I post on Nigerian Stock Exchange and Nairobi Stock Exchange come a lot from the USA, Germany, Poland, Russia, and some of that. That's information from my back end. Now, my question today is this. I'm concerned with how you can manage macroeconomic growth and market growth, especially when you intend to focus on retail investors.
Okay, let me try to address the question that was raised. Is the exchange willing to make information as to who is selling available to retail investors? The exchange believes in transparency. We do have a market data business where we provide all kinds of information to subscribers and to vendors. So if you go to our website, there's a portal there that we have over 56. We have over 56 products, and we continue to come up with new products. We'll look at this one and see if it makes sense, if it meets global standards, and if it will help to improve the state of the market.
Sorry, we will not be able to take all the questions that people will want to ask, But if you have questions, you can send directly to corpcom@nsc.com.ng. We will definitely give you the right answers. We thank you all for coming. Thank you.